Hey folks, this is Heather. I'm back again with another video on how to use Bullseye. This is the last video of our series called How to Use Bullseye Alerts. We might add a few more videos later on, but I wanted to have a 6-part video where we talk about both puts and calls alerts and both winners and losers. So I've tried to not cherry pick anything. I've just picked 6 alerts here that were either winners or losers, and we're talking about both of them. So today, the first 5 videos have been about individual tickers, but today I wanted to talk about and end this series with an index. So we are going to talk about the Qqq alert that we can see here. This came in April 23rd and today is April 30th. So just keep that in mind. Today is actually May 1st. It's around midnight here. So let's see. So we had this alert and the stock expectation was bearish and the alert was a buy put. The confidence is okay, 61%. We have some 75% ones as well, but anything above 60% is okay. Then we have the stock as 336. The contract price is $212 and the contract had 7 days till expiration. Again, I'm just reiterating that if you're new, just add a few more weeks in the expiration date so that you don't incur any large losses, so that your contract moves slightly slowly. So everything looks good here. This is a bearish alert, but when you see the change column, you can see that this alert actually has a minus 73% gain, which means a 73% loss right now. It never went positive, so the maximum that it went is minus 3.3%, which means a 3.3% loss. And these values are if you entered the alert right away without waiting for even a minute. So just keep that in mind, because that's going to come handy later on when I'm explaining a few things. So let's go into the price action. So this is how the price action is looking. Just from the daily chart, we can see that we have a resistance level here and then we have a support level here. We can see that the market is a bit choppy, where we keep consolidating between this level and this level. So we are waiting for either a breakout to the upside or a breakout to the downside. So let's see what happens in the next few days. But this alert came in April 23rd. Let's check the time as well. So it was 9:50, again early in the morning. So this is the daily chart, but as with the Bullseye alerts, we usually don't look at the daily chart, but it's always good to just do one glance on the daily chart to see if anything pops up. Here we can see that this is in a range. So if we broke out, let's say that particular day, then the setup would get invalid immediately. But we still want to look at the 15-minute chart. So let's go there. Again, as usual, I am not going to draw all the support and resistance lines myself. I'm just going to click on this button, and this has drawn some really beautiful and good lines for us. So the alert came on April 23rd, which is, let's say, yeah, right around this time. So that's okay, around this time. I'm sorry if these the price values and support resistance level values are getting mixed up. We'll fix this soon. Let's see. So yeah, the alert came in on these candles. So let's actually zoom out a little bit. Okay, it came in, let's see, yep, these candles, right? Let's see. So the alert came in around these candles, and you can see that if when the alert came out and it was a put alert, the recent price action was slightly bearish, but now we had started to go up. And right when the alert came out, you can see that the moving averages had reversed their direction from going down. Now they were starting to go up. That's a concern that you should have right away when you look at this alert, and it's a put alert. So you might want to think that this is not the right time to go into this alert. If you went into this alert, let's say for some reason you went into this alert, as soon as you break out of this resistance level, you need to know that you need to get out of that alert ASAP, because we didn't wait here. This resistance level, we just crossed it like it was nothing. When that happens, that's always a slightly concerning sign, especially if it's going against us, because this means that there is enough bullish pressure that bears couldn't do anything here. And then right in the next candle here, not actually here, we can see that we have a moving average crossover as well, where the 20 moving average has gone above the 50 moving average, which means the short term we are now in an uptrend. So there are two signals right away as soon as the alert came in that tell you that you should not go bearish right now, because all the signals right now are bullish. But again, the tool always knows something. So if it's saying there is going to be some bearish pressure and you should buy a put, and it's saying that that's going to happen within, let's say, 2 days, then just keep that in mind, and that alert usually always pans out within those 2 days. So we broke out here, so even if we entered, let's say, as soon as the alert came in, we had not watched these videos, let's say we entered here, we should still exit here. So let's say you're going to get, let's say, about a 10% loss. So still you're fine, 10% should be okay. But now we go up, and you can see that here we have another resistance, and we can't seem to break it. Every time we try to go up, we come down. Every time we try to go up, we come down. So what you can do is right here, we keep trying to go up, but finally we have some, I believe we have some volume, not on this candle actually. So you see the volume increases, and then we have a red candle here, this one, right? And we were trying to go up. So this is going to be your first entry. Now I know this entry wasn't the best one, but we still need to be disciplined. We need to follow certain patterns. We can't be random with these alerts or with our trading. So this was our first entry. Let's see. No, all right, this. So this was our first entry for a put. Because we couldn't break the resistance level, we came down with large volume. That means high bearish pressure. So this looks okay now. This might be when we are live in the setting and we have not seen anything in the future, we might think that this seems like a really good entry, and you're going to enter. Like you haven't seen the future, so don't worry about it. You need to follow certain patterns and certain rules, and this is a rule that you need to follow. We were trying to hit a resistance, we couldn't break it, we are coming down with some volume. That tells you there is bearish pressure, there is an opportunity to buy puts. Now again, this is just one confluence factors. We have talked about adding multiple factors in order to have the best possible entries and exits. This is just one of them. You can see that the price here, I am actually going to anchor the VWAP from the very bottom. Let's see, we'll have to try out a few values. No, maybe 180. I think we are close. Let's see, we are going to anchor it from the bottom because we are in an uptrend right now, so we need to know where the supports are. Maybe 170, I think 165, and there is a bit of trial and error with figuring out this value. So okay, now we are good. So we had our first entry here, then we exited here. I need to, okay, and then we entered here. Now you can see that, okay, this was a good entry, let's say, but there was only one factor that was telling us that this is a good entry, which was this resistance level. What was wrong here? Let's say you can still enter here. So let's say we enter here, but if you look at this, then there are two moving averages right below the current price, and there is the anchored VWAP below it. So there are three factors that are going against us. Still, this would have been an okay entry. So even if you're finding one good factor that goes into your favor, it's okay. So let's still keep that in mind. But there are three factors that are going against us. So if we had just gone down and the next candle had broken all three of these things, then then we have a support level and we break that as well, then that's a perfect entry because we are getting four different confluence factors. And since we are ending this series with this video, I just want to mention that these are not the four factors that you have to always look. If you are a technical analysis trader and you focus a lot more on technical indicators like RSI, MACD, stochastics, then it's totally fine that you can look those up. If you don't like these support and resistance lines and you are not aware of how to build the good ones, then you are totally fine with just using these RSI values. So we can see that RSI let's say RSI was about 70, so let's say RSI went to 80 here, and then we also had a resistance. That means maybe it's oversold, and then it came down, then that would have been an entry as well. So you have to figure out your system. This is the system that I use, and that's what I can describe. I am not a technical indicator user, so I just look at them like rarely, so that's why I'm not talking about them too much. But please keep in mind that it's your system, it's your trading system, you have to figure it out. I am just going over my process to tell you guys how I use these alerts, because and my process is just one process. So please figure your own process, but just know that the more factors that you have going into your favor, the better these alerts are going to work. Okay, so we have the put alert. We know somewhere the price is going to go down, and we see it going down here, so we enter. But you can see we have these three factors going against us, and within 3 candles you can see that this 50 moving average and this anchored VWAP acted as a support here, and we started going back up again. So that's going to, when you see and we start going back up again, you might be able to exit here, but it's too hard to know whether we are going to stay here or actually go down or up. Again, in real time things are different, so I'm trying to be real here. So you might not be able to exit here. So then you are going to exit when we actually have this green candle, because in the previous 3 green candles we again could not break the resistance, but finally here we had some higher volume and we broke that resistance level as well. So that's going to be your exit. So your first entry did not work. Let's say you got a 5%, 10% loss, or let's say you like got out with a 5 to 10% profit. But the alert is still there. It's only been 1 day. It was 23, so you have like the entire April 26. Okay, so we are going to wait. Let's say you still want to follow this alert, and you have some time, let's say. So now we have broken this level, we keep going up and up again, we have a resistance level again. But again, this is just one factor. So in this case, since in the previous alerts we had multiple factors going in our favors, all we are getting is just one factor that's going into our favor. So this might have been your second entry. So again, this alert, now since we don't have that many factors going into our favor, the confidence for this alert for yourself should be slightly lower. But this is we are still trying to follow an approach. So let's say we enter here, and now we can see that we are not breaking the resistance here. We tried to go up twice, we failed, and then we are falling down. So if you entered here, let's say if you entered here and you realize that this is now acting as a support, you would have exited here. So that would have been like 10% profits. If you entered here, now you have a really good exit point. You can see that we broke both the moving averages, right? And we entered here. So this would have been another good entry point, because we have respected the resistance line, we have broken both the moving averages, but the distance between this point and the anchored VWAP support is too low, so we might not have enough reward to go into right now. This actually presented us a much bigger reward, because 341 to 340 there was like $1.5 difference, which in options term is a decent profit. So if we entered here, now here right now we are going to know that this just acted as a support here, so it might act as a support here as well. So this is going to be our exit. And with how choppy it's been, indices are always slightly harder to trade, so just be more careful with QQQ, SPY, IWM. This was going to be your, let's say, first exit. If you had 2 contracts, this was going to be like, this had to be your first exit, because there is a level there, you can see it, and we can actually see that it's respecting it. It went below it thrice and it then ended above it. So we are going to exit our first contract here. Now for the second contract, you can see that we have actually gone to the next day. The alert was on April 23rd. We found a setup on April 26th, which was the next day, since April 23rd was Friday. And then on Tuesday, we have gone to Tuesday for our exit, and that's completely fine. Please know that the AI does its best to make sure that the alert is going to pan out within 2 days with an entry and an exit. But sometimes, since this is trading and there is no certainty, and there are millions of people trading, so sometimes things that we have trained our AI for don't always work out the way we trained it for. So sometimes you might find that you have a good entry in the first 2 days, but you might need to wait 1 or 2 days to get good exits. So please know that that's completely fine. We have tried our best to make sure that everything gets done in 2 days max, but sometimes it can easily go to 3-4 days. Sometimes we have had some members that got into an alert within the first 2 days, and then they exited, let's say 2 weeks after, and they had like 500-600 profits. So they just looked at the chart, let's say, and they found out that there was one support below, and they were fine with that support, and there was a resistance far off from the current price. So they just waited until we went towards that resistance, or the trend reversed. Let's say the moving averages started to face downwards, something like that. They had their own criteria. So sometimes it's totally fine to keep these contracts for more than 2 days. It's expected that there is going to be a really good entry within 2 days, but that's a really high confidence expectation. But sometimes you need to wait to get a really good exit, and that can go into day 3, day 4. So please know that that's completely fine, and that sometimes happens. Okay, so we are going to exit our first contract here. Now since we entered here, we can probably wait until we cross this level, so that is going to be our second stop loss. Or if we are sure that this might actually go down from here, then we can wait. So the second contract, we might let's say have a 10-20% loss if you're willing to have that loss, because we are sure that is going to go down. We are going to have a stop loss somewhere here, and if we are sure that this is going to go down, then we'll have our profit targets at this level. You can see that we went up, and right at this point we broke this trend line, we broke this anchored VWAP. A really good tip here is when the anchored VWAP gets totally flat, then that means that the trend, especially the short-term trend, can probably change. So please keep that in mind. You can see that here we couldn't break it here, but we finally broke it here. We broke it again. You could have exited here, or you could have just waited until we went really close to this again. Now a tricky thing here would be if you waited till April 29th, you'll see that you would have gotten stopped out here. But again, the price actually did go down quite a bit. So overall, this was a slightly, as you can see, this was a slightly hard alert to follow. I wanted to have this alert here because in the first five videos of this series, you might think that this is too easy. Sometimes it does get slightly complex, and you have to get in and out quickly, or you have to, let's say, incur 10-20% losses. So that's again completely normal. As long as your profits are bigger than your losses, you are doing great. And we have discussed 5 concrete examples with exact entry and exits. And I'm really hoping that you're going to watch all of these videos in detail, and you're going to go read some charts, try to implement this strategy in your own trades, and then be really profitable with the Bullseye tool. But yeah, then we just to finish this off, we would probably exit here, because we can see that the first time we hit it, we go up from here. The second time we hit it, now this has actually become a support level. You can see we hit it 4 times. So now this is not a support level anymore. This is the support level. So you'll probably exit here. So again, both of those, so there were 3 entries. The first entry was a loss. The second entry with 2 contracts, we had 2 really good exits where we actually exited with profits. So that was it about this video and about this series. I just wanted to mention a few things, and I'll probably mention them in the next video, and it'll be a very short video on a few tips and tricks. But thank you so much for watching all 6 videos. I'm hoping you watched all 6 of them. Please, if you haven't watched them, please do watch them completely, because I think they're really helpful. A lot of people ask me to create videos and content on how to use our alerts. This was a demo on how well the alerts work, how bad they work sometimes, how do you have to be careful in choosing your entries and exits. And a lot of people really wanted a slightly longer tutorial on how to find these entries and exits. So that's why I've spent a lot of time on those 2 things. So I hope this is going to be useful for all of you. Have a great weekend, since this is Saturday here, and I will see you guys in the next video. Thank you so much.